Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news of a sudden change in the value of fossil fuel investments. But first, the April durable goods order data for US came in surprisingly weak. They were 1.3% lower than for March, which is far enough from the 0.7% gain expected. 2021 orders for non-defence capital goods, however, recorded a good 3.5% gain. US initial jobless claims fell again, down to 420,000 last week, and the lowest since before the pandemic started. There are now 3.5 million people on these claims, well down from the 22 million at the peak, but still well above the pre-pandemic level of under 2 million. And the Kansas City Fed's factory survey also reported softer conditions in May than for April, but they're still reporting a strong expansion and also reporting very sharp pricing pressures, just like every other similar survey nationwide. And we should note that the coming weekend includes the Memorial Day holiday in the US. Memorial Day weekend serves as the unofficial beginning of the US summer driving season, and more than 37 million people will be on the road this weekend, and petrol prices are expected to spike as a consequence. And in courtrooms, a Dutch court found in favour of environmental groups and ordered Royal Dutch Shell to set deeper and faster emission cuts, targeting a 45% reduction by 2030. The case, which industry experts say may serve as a precedent for other European oil majors, came the same day as ExxonMobil was dealt a blow with a small hedge fund unseating 2 board members in a bid to force the US company to diversify beyond fossil fuels and to fight climate change. Current investors in oil and gas are going to find it very hard to quit their holdings without taking huge haircuts. These 2 rulings have caused an earthquake in the fossil fuel industry. One likely strategy for these investors is to now maximise their returns in the short run as they stop investing. With little competition, prices for fuel may well rise sharply, even as demand falls. Meanwhile, profits at large Chinese industrial companies grew at a continuing fast pace in April, despite the high commodity prices and weaker performance of the consumer goods sector. While the year-on-year comparisons distort the usual benchmarks, compared with April 2019, those profits were 49% higher and operating revenues were 33% higher. In Australia, Victoria is now in a 7-day lockdown, causing a suspension of flights to and from New Zealand, and other states are closing their borders with Victoria too. The US Treasury 10-year yield starts today 2 basis points higher at 1.61%, and the price of gold starts today up to $1,897 an ounce, a gain of $4 since this time yesterday. And oil prices start today marginally firmer too, at just under $66.50 a barrel in the US, while the international Brent price is just under $69 a barrel. And the Kiwi dollar opens today marginally firmer at 72.9 US cents and holding its RBNZ-induced slightly higher level. Against the Australian dollar, we're up to 94.3 Australian cents, and against the euro, we're still at 59.8 euro cents. That means our trade-weighted index starts today at 74.5, and that's an appreciation over the past week of 124 basis points. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.